Ask for it. The comments are here. We're doing a hot take on gold and silver. So from our view, from an investment perspective, a retiree safe haven has effectively three jobs. It needs to hold its value when equities are falling or there is volatility. It needs to maintain purchasing power, which means it's inflation protected. And it needs to be liquid. It needs to be reliable to access. And gold, silver, precious metals could be seen as being in that bucket, but not always.
No. Yeah, it's interesting. Look, I think when I speak to people, and obviously gold's been a pretty hot topic in a lot of conversations I've had lately. But sometimes people probably confuse a bit that, I believe in gold as an asset, or I believe it's a safe asset, versus actually considering, does it do the job that they need it to do in their portfolio? When I think about those three characteristics you're speaking about, it does tend to hold its value when equities fall, sure. It is seen as an inflation hedge. It generally will hold its purchasing price, but it's not that liquid. Can't just snap a little chunk off the end of my bar and run down to Woolies with it. I'm not sure. Yeah, I'm not sure how it really ticks that box that well.
I remember many years ago, someone was like, okay, so here's how to think about gold. An ounce of gold 1,000 years ago would have bought you a fine suit. And then today, it would also buy you a fine suit. And at any one point in time in that prior 1,000 years, that same lump of gold would have been exchangeable for about the same thing. So that tangibly makes sense. But then in an investment perspective, it's like, cool, it's not actually growing. You're not building wealth.
And that probably hits that point really well of like, is it doing the job that I need? And typically when comes up people talking about gold, it's like, I have exited the equity market and put all my money in gold because I'm worried. That is not doing the job that you need if you're a retiree. You've got a big lump of stuff that literally does nothing, pays you no income, doesn't create anything. It just sits there. And then, yeah, it'll keep up with inflation, but are you just trying to keep up with inflation?
I think to move on, the rationale for certainly silver ended 2025 as I think the highest asset class growth. But basically all of the growth came in the last 2 months of the year, which is why you people were commenting and asking us questions about it, which is why we're talking about it today. And I didn't want to respond straight away. So I wanted to give it like a couple of weeks, because like any great bubble, it obviously ripped up hard, came off over Christmas, and now it's sort of, it's still higher than it was in November, but it's it was a bubbly asset. There was money running in. When retail people are asking about it, a pullback will always come, and it did. And I think there's a couple of key elements here when it comes to precious metals specifically, and this is what I'm talking about in my portfolios. It's a giant lump of money. It's a giant asset, and we have a alternative classification, but Phil and I were talking about this before the podcast started, and alternatives are a massive investment sphere. They could be music, they could be royalties, like the Listerine royalties, they could be private equity businesses, or they could be gold, silver, precious metals. All completely different risk profiles or risk.
Yeah, that's the thing. I completely hate the term alternatives. And actually, I was literally just before we started filming this, was talking to some clients about this. And hello, you'll know who you are when you watch. But the concept shits me, because you see, a lot of industry funds hold significant alternatives allocations, and it makes sense. They've got massive flows. They've got to find somewhere to put it. But the risk profile of these things could be anywhere from super, super safe, like a big building somewhere with a 50-year government contract, to, I don't know, like private equity that's God knows who they've lent it to and what for. They could fall over tomorrow, which we've seen happen with a major industry fund last year.
Yeah.
$1 billion lost in a private equity deal, all sitting under the alternatives bucket. Like, that's how you're supposed to assess the risk of that.
Yeah. So I mean, like answering the question of you as a viewer, if you've clicked on this going, what do we think about gold and silver? I don't like it, but I don't like it for the key reasons that might not be that obvious. My issues are around the lack of liquidity. Let's imagine you've got a lump of gold right here. So I have this answer often, right? So let's say, and we've been asked, I mean, Phil, you and I, we've been asked about this question since we started advising, right?
Yep.
Let's imagine that the zombies come, right? The apocalypse has come through, and the Aussie dollar is now worthless, and well done, you soldier. You tucked some physical bullion aside, and good for you. Well, how are you going to buy a loaf of bread? You can't, it's not divisible, can't cut it up. You can kind of hack it, maybe, but how are you going to prove it's real? So what we're going to do is I'm just going to go through on the slides as I'm talking. If you just go to AliExpress right now and Google gold bar, you can scroll through hundreds and hundreds of fake gold bars. They look real. They come in a very fancy box. They come with a certificate. They've got the perfect plastic wrap, and they're all fake. And so I've definitely had this conversation with clients over the years, and they've gone, "Oh, well, I'm going to stock up on a few of those," because you can get a bunch of gold-looking bars for $30. The final point is that you got to do destructive testing. Destructive testing is a way to genuinely check a gold bar. So what you need to do is you need to X-ray it to confirm what the physical mass inside it. So often there's tungsten bars that are put inside these things. So what you'll get is to fake a bar, it's fairly easy. You get tungsten, which is a lot less. You then wrap it with genuine gold so that it passes an acid test. And what that is drops of acid are put on. You'll scratch the physical surface. It will then change color when you put on a dipstick to confirm that is actually gold metal. And that is a destructive testing process. But then you also got to actually X-ray the physical bar to confirm what's in it is not actually tungsten, because it has almost the same weight, they call it the AU weight of this on the scale, as gold.
There you go.
Yeah. I've had a lot of time talking about this over the years.
Yeah. So be wary when you're exchanging gold bars for bread in the zombie apocalypse, is what you're saying.
Look, and then the final point is the buy sell spread. So you go to Perth Mint right now, and they have a buy sell spread. So they will sell it to you at a price where they make profit, whatever that is. So if the gold price today is at X, they're going to basically sell it to you at a 5 to 6% discount, meaning you're instantly 6% worse off when it comes. And you need the price of gold, not only to price of gold or silver, to appreciate by that 6% to be neutral. You actually need to go further away if you wanted to sell it, because they have a price they buy at, which is higher than the market price. So you could be up to 8 to 10% transaction cost on that.
Yeah. So you look at a buy sell spread on a gold bar of like 6%, 7% compared to a managed fund of 0.04 or something.
Yeah. So that's my rant on physical. So when people ask me, what should I do about physical? I go, well, I think just buy if you're really, really worried about it, get the fake ones, because you're going to be behind at least 10 to 12% on the sale. That's assuming you don't lose it or have it stolen.
Yeah. And probably the other point is too that, the market's probably a little different today than what it was a while back. And you no longer need, if you love gold and you want to have gold exposure, personally, I'll just go and buy the gold miner, not the gold. But if you really want to hold gold, you can just buy that through an ETF. So rather than actually buying the physical lump, having to store it in a safe somewhere, pay someone for custody, all that sort of gear, there's gold ETFs available that you can just go and purchase like you would any other share on the share market. It's backed by gold, and away you go. And that way you're not stuck with that problem. Oh, I need to buy a loaf of bread, got to chip a lump off my brick. You can just sell a few shares.
That includes, why would you do that? Well, the benefits, you can't lose it because you could physically lose this thing. The buy-sell spread's a lot tighter. It's insured at suitable places, as well as the fees are like a quantum leap lower. Now, obviously, general advice only. We are not specifically telling you what to do. So it comes with the caveat of do your own research. But when you're comparing a physical versus what Phil has said around the ETF, that's a more liquid, lower cost way of entering into the gold market.
I found an interesting chart actually earlier, just to probably illustrate that point I was making as well, where, sure, there's no argument that gold is a good store of value. It's a good inflation hedge, which is usually the thing it's sold about. I'll put my money into gold instead of the bank because it's going to keep me ahead of inflation. I won't lose purchasing power. There's no argument with that. My argument is, why the hell would you want to get inflation? And I just found an interesting chart, which also kind of highlights, filtered the chart down to, if you look at, 2023 through till now, the gold line there is actually gold, funnily enough. And the blue line is the Dow Jones index, which is just a representation of kind of the US economy, 30 large cap companies in the US. So look at that as a representation of the stock market, US stock market. And you can see over the last period, like gold has actually outperformed by a reasonable margin. It's had a really big run up. Hence why it's been a fairly significant topic of conversation. But what's really interesting is if I pull this chart out and I go from, over the last few years to, the last 20, 30 years, we start to get a pretty significant difference. So the blue line being the Dow Jones index and gold being the gold colored bar, but it's literally nearly double over the long time. Having your money in the share market versus gold, it literally would have doubled.
Which totally makes sense because you're in productive businesses that are producing income, and the thing that's so important when we're trying to create these charts is the reinvested dividends. So income, businesses within the stock market spit out an income. If you can reinvest that 3 to 5% per annum, makes a phenomenal difference, which is what that really looks like.
Yeah, not just a lump of metal sitting in a safe giving you nothing.
So, Phil, when is a good time to buy gold? Or why would I be buying gold? Or when should you buy gold?
Oh, look, good question. I think, I wouldn't. It's probably my answer.
I think it comes down to jewelry. It comes down to it's the historical dowry, which is where the history of the rings come from.
Yeah, I wouldn't buy gold for my wife. She hates it, so that'd get me in trouble. But she's not a fan.
My wife doesn't mind it.
No. Well, no, there you go. But outside of those kind of uses, realistically, there are other more practical things that you can do with your money that are probably going to return better over the long term. It is interesting seeing the shift to Bitcoin, which is probably seen as like digital gold. So it's more of the modern day version of gold, also seen as an inflation hedge, and probably is holding up to be true at the moment. But God only knows what the future will bring there.
Yeah. So if we're buying Bitcoin just to act as an inflation hedge, is that really the best investment for us, or are we gambling on it, saying, no, it's going to continue its seismic rise?
Yeah. I think most people are buying it because they've seen massive gains and think, a bit of that.
And that's always the best time to buy an asset after it's already had parabolic growth. Yeah. And to be clear, it's the worst time to be buying something.
It's the old saying, isn't it? Once your cab driver tells you about it, it's too late. Well, it might be have to update the saying to once your Uber driver tells you, but
yeah, I'd like these jokes of you can see like the Uber drivers trading crypto during the bubble. That was crazy.
Yeah.
The one thing that I will touch on from a geopolitical perspective, because this is an area that I do froth over, which is this run up was real. This run up of the December run up in precious metals was not based on the demand from industry, which is where this is typically used. So silver is usually destroyed in the process of industry, whereas gold is usually reused. Just in terms of the Earth's crust, there is somewhere around 100 times more silver in the Earth's crust than there is gold, which is why there's that roughly 100 difference. And as well as the ease of access of silver is easy to mine. Depending on how you do it, the way they mine gold is they'll basically just get a gigantic lump, several tons of soil. They'll drop those tons in several acids including cyanide. Those acids will eat everything. As gold is a non-reactive metal, which means the acid will eat everything. It will not react to the gold. So what you have left is just little bits of gold. And that's the process. Terrible for the environment, but that's how it works. With this geopolitical play that I think has happened on why we've had these precious metals just go parabolic is lack of trust in the US reserve currency or US dollar. So most trading at an international level is usually done in US dollars. If you've wanted to buy something offshore, it's very weird. If you want to buy it doesn't matter what it is. If it's, a pair of shoes from Spain or, anything from any other country, they'll usually transact in US dollars, which is a pain in the ass because it's like, why do we have to have this third currency in relation to just buy in euros or whatever it is? That global reserve status enables the world to transact. With it taken out, we don't trust each other as much, which is a great benefit. But the problem is that the US just keeps printing, and they're not producing any more goods or services. They're just literally printing dollars, which reduces the value of their dollars. And I think what actually happened is a lot of people went, I don't want to hold dollars. I want to hold physical gold, physical silver. That would be one of the reasons to do it. So if you are a large hedge fund, if you are a large business and you're sitting on a lot of physical cash that's in US, not a bad time.
No. And I probably should have qualified my statement when you asked me, when's a good time to buy? I'm talking about from the perspective of the average retiree or personal investor.
I agree. We are in agreement. But that would be it. If you're like a Russian oligarch trying to escape sanctions, great way to transact. Not traceable. There's no anti-money laundering ID checks you need to do when you're buying
Yeah.
or selling it.
Yeah, all the fun stuff we've got here.
Again, not an issue, mum and dad investors, but look, that's what's happening with the metal.
Yeah. I can understand. I mean, you've only got to look at where inflation's been over the last few years and how crazy it's been. I can understand why people are looking to gold as an option. But yeah, it's just not a practical asset for your average retiree.
So let's summarize this up, Phil. Practical takeaways for an Aussie retiree, pre-retiree.
Yeah, I think, look, gold's not unlike any other major lumpy asset. You know, we see the same issues for a lot of retirees coming into retirement with investment properties. Not saying it's a bad asset. It's just impractical quite often for retirement funding. You need stuff that's liquid. There are other low risk assets that you can use that are going to fill that job. You know, we're talking about hold its value in equities for maintain purchasing power and be liquid. There are other things you can invest in. And gold just purely as an investment, setting aside a retirement. Well, look, there's stuff that's going to do better than inflation, so maybe buy that instead.
But you also just at a high level, just be cognizant. What problem are you solving? Are you wanting to solve for drawdown protection? E.g., if the stock market shits itself, I want to have something that protects me. Well, gold is correlated to the stock market. It does have a correlation. So, X on that. Is it inflation shock? If we have a shock in inflation, maybe it'll help offset massive inflations. But what about diversification? I'm worried about being too over-invested in my property. So I want to have some diversification. So I'll buy gold. Do you reckon that solves that problem, Phil?
Yeah, no, not really. It's just another lumpy asset. Well, what I would say is if gold is something you feel that you do want to hold in your portfolio, well, maybe just consider other methods. In a typical retirement portfolio, maybe consider other methods of accessing it. Things like gold ETFs and that sort of thing that are liquid will still give you the exposure. Or, if I feel good about gold, I don't buy gold, I buy gold minor stocks, which I own, I hold several. That's another way to go about it as well. I'm not saying you should do that, general advice.
But yeah, there's a bunch of ETFs that have a blend of the largest gold miners in the world. It's going to give you quite a lot of what you get from wanting to have physical assets plus an income.
Yeah, exactly right. I get dividends as well. I don't just have a thing that sits there and does nothing.
Yeah, and it also doesn't overexpose you to one specific business or geography. So that is an area that we look at with our clients. If you're interested, feel free to book a meeting with Jordan and he can pass you on to us. Gold is not a plan, it's a tool. If you don't know what the job is of a certain asset inside your portfolio, you don't own an asset, you own a story. I think it's just easy. It's easy to market. You can see a lot of advertisements, and that's why a lot of people are going, "Oh yeah, that makes sense." But then when you actually look at it from a professional context, there's a reason why professional investors are not doing that. There's better options. All right, guys, thanks so much for watching. We are going to keep this weekly cadence. Please do like this podcast, subscribe it. I'm in the comments more than Phil. We do read the comments. I'm looking at you. But we do also appreciate your suggestions because this was a suggested podcast. So we put it together. It might not be what you expected. And I know there's a lot of probably things on the internet right now saying buy gold. So it's nice that we're one of the ones who are saying maybe there's some other options. Cool. All right, guys. Till next week. Have a great time. See you later.